A new report out from the House Financial Services Committee looking into issues at Robinhood during the height of last year's meme stock trading frenzy. And the report really highlights a number of things. First, they allege that Robinhood showed, quote, inadequate risk management, said that companies that they spoke to that were involved in that whole process, quote, do not have explicit plans to change their policies on collateral, saying that there needs to be more written policies from the Depository Trust and Clearing Corporation. I mean, there's just a lot to unpack here. But Akiko, I just wanted to add, we got a statement from Robinhood. And the quote is that, quote, this report is nothing new, once again confirming that January 2021 was an extraordinary, once-in-a-generation event that stressed every stakeholder in the market. But the report,
it kind of goes against what, I mean, bottom line, this report, a year of investigation, essentially says things were much worse than Robinhood let on publicly, at least. And the number that stands out to me here is this is from the report. The only reason the company didn't default on its collateral obligations is because it received a record $9.7 billion waiver. I mean, that alone tells you the hole that Robinhood was in. Obviously, at the time, we had learned that they had, raised funds, right? $3.4 billion cash infusion they got from their investors. But the question to me is, well, what has changed since then? And this report seems to conclude that those safeguards haven't been put in place to avoid another event like this, and that this could potentially only increase because if you think about who's investing in the market today, we're talking about younger investors, and this report points to the fact that they think that more, social media will play an increasingly influential role in where people are investing, which is kind of what led to the surge. I
mean, I think the challenge here is that there's kind of two ways and two lenses from which to view the whole situation. One was that, well, yes, the brokerages were really unprepared for something like this. But then on the other hand, how could you have expected as a brokerage for a stock to be moving hundreds of percentage of percent in single days, one after the other, right? And that's the reason why the margin requirements, which required a lot of these brokerages to put a ban on trading these meme stocks, had to be put in place because they couldn't meet the collateral requirements that were set by the rules. Now, it's clear that based off of the report, at least, even the Democrats and Republicans can probably agree on this, that the system for requiring the stoppages in those tradings were clearly outlined. They had to follow the rules that were put in place by the DTCC to make sure that they could actually make sure they were not going to lose the margin that they were holding. But at the same time, you have to acknowledge that, yes, we should be prepared for something like this in the future. Well, so does that require changes? Something the SEC will probably have to weigh in on.
Well, I mean, and that's still, to be determined. But, going back to this report, I was telling you off camera, the one quote that stood out to me, this is the CEO of Apex Clearing Corporation, says, if the question is, do I think it's going to happen again? The answer is yes, for sure. No doubt about it. I mean, that's not a big vote of confidence there.
Nope. But again, Robinhood's saying that it's a once in a generation event. So something to square there. But we'll leave that there for right now.